Let's dive a little more into this. Bring in our friend and chief market strategist for StoneX, Kathryn Rooney Vera. Thank you very much for joining us. Forget about FOMO, Kathryn. I'm going to throw out something else called FOBLO or FOBLO, which is fear of being left out. And I do wonder, because so many firms got it wrong, that everyone's kind of running the other way now.
Yeah, I think you're right, Brian. And there's another one that we didn't mention, Herb and Brian, and that's TINA. And there is no alternative is kind of etched into people's minds, as it correctly should have been, because we've been conditioned over the past 10 years to believe that even if there is a correction, it's the time to get in. One other statistics I'd add to your introduction, Brian, is that since the 1950s, after peak inflation, historically, you get a double-digit return in the equity market. Since the October lows, the S&P is up, 20%? And from the peak in June of last year, where we had inflation of 9%, the S&P is up 15%. So one has to ask themselves, how much more upside versus what is the risk to downside from here, when we've had 500 basis points in Fed tightening over that 1 year time frame? And we have a labor market that is starting slowly but surely to show a rollover.
Kathryn, 5% risk-free money sounds pretty interesting to me. Do you have a view on the remaining 6 months? You think the gains have been made? Because to Dietrich's point, that stat that we ran at the top was basically like, when we have these kind of gains and when people are still negative, 4 out of 4 times in the past 30 or whatever years, the market has continued to go higher the rest of the year.
Right. And TINA's out the window. And that was my point. We do have fantastic alternatives. Look at T-bills. You have T-bills, high-grade paper, and equity dividend or earnings yielding within 50 basis points of each other. So cash looks pretty attractive right now. And what I would say to investors, Brian, is, look, we've had this mega rally with the breadth being very narrow. You can play tactically that short-term momentum trade and play the laggards, which is small caps, with that massive divergence versus NASDAQ. It includes energy, it includes financials, materials, the laggard trade. But if you have a 12 to 18 month horizon, my perspective is the next phase of the economic cycle is recession. Yes, we got the timing wrong. Timing is really very difficult to be precise with. But I would say now is the time to be counter-cyclical in your investment strategy. Maybe unwind some of those high flyers and add more defensive positionings.
Citigroup just downgraded the United States and said Europe may present a better opportunity. Time certainly will tell. It's been a heck of a first year to the thing. I got 2 hotels on Baltic. I want to sell you. Herb Greenberg, Kathryn Rooney Vera. Thank you both very much.